Redfin's been in kind of a little bit of trouble lately. They just announced that they were laying off another 13% of their workforce, and they did this only after they just announced that they were ending their flipping program or their iBuyer program. If you don't know what that is, the last couple years, these companies would come in, offer cash to people trying to sell their houses. They'd take the house, flip it, and then sell it themselves. If you're an individual small-time investor, this could be a good idea for you, but when you are a huge company, it's a little bit harder to make it work. And Zillow decided a while ago that it didn't work for them. And honestly, Redfin should have closed up shop a lot earlier. And that, coupled with low sales volume in the real estate market, has really gotten them in trouble. Now, I don't know how Redfin couldn't have seen this coming, because way back in May, right at the beginning when the Fed was increasing the Fed funds rate, they caught on pretty quick. They knew that sales were going to drop, and I noticed them install a new little tab on their website that wasn't there before. The rent tab. That was not there before May. And the reason why that's there now is because Redfin knew that their sales were going to drop and they were not going to be making commissions off of home sales and purchases. But what they could make commissions on was rent referrals. So Redfin was pretty quick to see what was happening, but they were kind of slow to react in other aspects of their business. And that's what led us to today. Right now, Redfin stock is at $4.31 per share. That is 10 times less than what it was at the beginning of the year. And I'm not sure it's going to get better that quickly, but I do think it'll get better. Online digital brokerages were new within the last decade, and Redfin was definitely a pioneer in the market. It's now become such a staple in the industry that I don't think they're going anywhere. But as long as mortgage rates are as high as they are, I don't see sales getting any better. And if there's no sales, Redfin's revenue isn't going to get any better. I really think that when the market starts to pick up again, and I believe it'll do that in the next year or two, Redfin will probably start doing better as well. And when Redfin starts doing better, I think their stock's going to go up. Call me crazy. The real estate market is going to pick up as soon as mortgage rates let up. And mortgage rates are probably going to let up once the treasury rates are going to decrease. And the treasury rates are going to decrease once the Fed rate decreases. And honestly, I'm not sure what's going to happen yet because the Federal Reserve hasn't announced what they're doing, but we got a really good consumer price index report that inflation is actually down for the first time in 6 months. So that's a sign that the Federal Reserve might be looking at pausing or decreasing eventually, not right away, but eventually, the federal funds rate, which kind of triggers a chain reaction in the economy. So once those things happen, the real estate market's going to come back. And when the real estate market comes back, Redfin's business is going to come roaring back. Well, thanks for listening today. And if you haven't already, go ahead and smash the like button and subscribe to this channel. I'd love to share more about personal finance, business, and real estate with you. Thanks for stopping by. As always, I will see you next time.